Thank you, Mr. Chairman, and I want to particularly welcome Mr. Waller from Georgia. Thanks for making the trip. Thanks for your testimony. Thanks for all the work you do in the community. Want to ask a question of you, Mr. Waller, and also like to hear from Mr. Peter on this. Why is it that institutional investors, private equity firms, are so much more liquid now or have so much more capital at their disposal to allocate toward investments such as buying up housing stock? Or do you agree that's a fair characterization of shifts in market dynamics? Thank you. Why don't we begin with you, Mr. Waller?
At Georgia Appleseed, we're focused primarily on sort of the tenant experience and protecting the tenant. So I don't have the kind of research I think that Mr. Peter could provide. What I can say is that what we're seeing is that there is a lot of money available for these investments. But what we don't see when these investments are made are the construction of new properties or buying in a property and investing in the property and upgrading the property, the kinds of things that you think about when you think about community investment. Instead, this is the purchase of a property, the extraction of as much money from it as possible, and then often, in the end, a derelict building when nothing else can be done. There are stories in the newspapers in the AJC or in Atlanta just yesterday about properties just like this that are essentially left to communities to pay for. So these investors come in, buy the properties, and then push those costs onto the community and onto the families living there.
Thank you, Mr. Peter. Your perspective, please.
Thank you, Senator. Yes, if you refer to the chart in page 4 of my written testimony, you see that multifamily mortgage debt outstanding has grown exponentially. And this is because of the federal government, particularly the GSEs, Fannie Mae and Freddie Mac. And so just in 2014, there were $400 billion outstanding. So now this is, by the most recent quarter that we have, Q3 2021, this has grown to $900 billion. And the reason why this is happening is because the GSEs are offering more liberal credit terms than the private sector, and hence they're able to crowd out the private sector from this business, and this is making it attractive for private equity firms to come into the market and take advantage of these liberal terms that they otherwise would not get from the private sector. So I think the solution, if you look at it, is to shrink the GSE footprint in this market, but also in the single-family side, if you want to solve this problem that you have identified.
Thanks for that input. And Mr. Waller, how does the tenant experience vary typically between a tenant occupying a home or an apartment owned by an institutional investor such as a private equity firm and a tenant who is in a home or apartment that's owned and run by someone in the community?
Thank you, Senator. So the way that I tend to think about this is, the farther that the landlord moves from the community and the family, the more the landlord sees the arrangement as a purely business arrangement. And so from the out-of-state institutional landlord's perspective, there are units that need to be filled, they're fungible, and there are customers that fill them. From the tenant's perspective, this is a home. It's very expensive to move into the home and acquire the home, and it's very expensive to leave. And so the farther apart those two eventually the owner is from the tenant and the owner is from the community, the worse it gets for the tenant. And so what we see is that the landlords that are out-of-state, institutional landlords, it's difficult to hold them accountable when there are problems. The tenant has no one to speak to. The community has no one to speak to, except perhaps a property management firm, which will come and go. They'll change often. And so as a result, they're subject to increasing and novel types of abuses that we haven't seen before.
Thank you, Mr. Waller. I want to come back to you, Mr. Peter, and reflect on some of the comments Mr. Waller made on the different approach that institutional investors will take toward property management. Their incentives are different. Much has been written about how over the last 50 years, the incentives in the financial services sector among institutional investors and fund managers have shifted toward short-term returns. That's how compensation is structured and rewarded. There's been a shift, many have argued, from a long-term approach to capital allocation to one focused only on the next month, the next quarter, maybe the next year. Do you agree with that? Do you think that dynamic prevails in our economy? Do you think that impacts how institutional investors might manage the housing stock that they're buying?
Yeah, I think ultimately it comes down to market power. And currently we have this massive shortage of housing and rental units that is making it easy for landlords, be they large investors, be they mom and pops, but also on the single family side to drive up home prices. And as long as it's being financed by the GSEs, these institutional investors are working within the system, which is allowing them, afforded by the GSEs, to take on more debt, load up profit of the system that the GSE provide. So I think you want to look at the role of the GSE and shrink those down. And I mean, it's all working within the system, because if you can raise rents, which is allowed by the terms that the GSEs come in, you increase the cap rate, which then allows you to extract even more equity, which is underwritten by the GSEs. So it's kind of this circle.
Thank you, Mr. Peter. And finally, Mr. Waller, and feel free if you want to take some time on this and contemplate and get us something for the record. Don't want to put you on the spot. But if you have any suggestions for Congress as we consider housing policy, of what we can do to increase supply, right, to reduce barriers to increase supply and to incentivize investment in supply and growth of housing stock. We have shortages across the country, driving up rents, driving up prices. If you have anything you want to offer now, and then we'd also welcome anything for the record. That's my final question. Thank you.
Thank you, and we would be happy to offer something for the record later. But I can say that, thinking about the fact that there just simply are not enough homes for folks to move into. So I had mentioned April earlier, who simply cannot find another home in Albany, Georgia, where she can live with her mother who's in a wheelchair. There needs to be additional housing. The system we have now is not providing it. So I do think that there's a role for direct spending to state and local governments, mission-driven nonprofits, to invest in the development of affordable housing. I think that would be a big help. I also want to, again, underscore something that's been said a couple times. Accountability and information. Local governments need information to make good policy. And right now we have very little information about how these landlords operate, who they are. And so measures to increase that would be very helpful.
Thank you, Mr. Waller.
Thank you, Senator Ossoff. The senator from Arizona was recognized, Senator Sinema from